Today, the indices hit some critical resistance and we did see sellers into the close. First up, let's take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today SPY went absolutely nowhere, only going up 0.07%. And intraday, we did hit some very critical resistance up here right around SPY 407 to 408, and we did not fully close that gap, which is right there at 408.14. Now, when we look at the other sectors, you're going to see why today was very critical. Even though we went absolutely nowhere, we did close below a negatively sloping 20 daily moving average. So we do have this very wide trading range above the 200 daily moving average at 393 and this very critical resistance zone right around SPY 407 to 408. Also keep in mind, we still do have a gap to fill down here at 398.69, which is just above the positively sloping 50 EMA. So there's going to be a very good chance from this rejection in this bearish looking daily candle that we do come back down towards this support zone at 400 to 401. Now also keep in mind on the daily chart, if we cannot close back over the gap fill at 408, there is still the possibility this is a lower high rejection after we did get a lower low below SPY 407. So if we continue to put in lower highs and then lower lows, this is very obviously going to continue to be a bear trend, and we need the bulls to break out to a higher high or at least make a higher low and then break out to a higher high to continue a bull trend. So simply illustrated, we need the bulls to put in a higher low, bounce, and then come break back over this resistance at SPY 407 to 408, and then they will have the benefit of a short-term uptrend. Based on how I drew this, you could see it's very possible we come down towards that gap fill right around 398 before we put in that higher low. And then if we see buyers and we get the breakout to a higher high, that should be confirmation we're going back into the bull trend. But for the time being, this looks like it's going to be a trading range chart, which means we're more than likely going to continue bouncing between support and resistance with no clear trend. So continue to expect a very choppy market between SPY 408 and down here around the support at 400. And the break of that range should tell us which gap is going to fill first. And then once we get to the gap, we need to see if there's buyers down here around 398. And then at the gap at 408, we need to ensure there's still sellers. If at any point we blast through either of those gaps, that is going to set the trend direction. It's going to be bullish above 408 or bearish down below 398. On the NASDAQ 100 triple Qs, we were up 0.11% today, and intraday the triple Qs also went gap to gap. So we had the gap up, so there was automatically a gap to be filled around 299.92, and then we still had the gap to fill at 303.15. The gap at 303.15 filled first, and that was very strong resistance because it was also our resistance trend line. So we instantly found sellers around that resistance and came all the way back down to fill the gap from the early morning session. So with both of those gaps filled, we can now delete them, and you can see very clearly this is a bearish rejection daily candle at the resistance, but we did close just above the 20 daily moving average. Now also keep in mind the triple Qs still have a gap down here at 294.43 and 288.36. So in a bearish scenario, it is possible this rejection continues down towards these gap fills, and the bulls need to hold this critical support at the 200 daily moving average, which is still right here at 290. The bull breakout will be the break above the resistance trend line, and then we'll be looking for a run back up towards 311 to 313. And then above that, we could start marching higher into the 320s. So this is a very critical daily rejection candle because the bulls obviously did not have the strength to push through resistance, and we did see sellers showing up. So if you're following price action, you need to be very cautious until we get a clear breakout of that resistance just above 303. And you need to be very cautious as buyers if we lose support down here right around 299, because we're very likely coming down to 294 to fill the gap next. On the Dow Jones, we were up 0.14% today, and the Dow Jones tested that negatively sloping 20 daily moving average and that resistance zone right around 335. And we did find sellers at the breakdown of the triangle, which was right there at that median point around 336. So the bulls need to push through all of this resistance and get back into the 340s, and the bears want to immediately get a rejection here to make it look like another lower high rejection to take us down to the 200 daily moving average at 324. Look for strong support on the way lower right around 332 and then 327. And if we break all of that support, look for that strong support at the rising 200 daily moving average at 324. On the Russell 2000 IWM ETF, we were down 1.46% today, and the Russell 2000 has this failed breakout look where on Friday we had the breakout above the resistance trend line and back over the 20 daily moving average, but we did not get the second day of follow through with today's price action, and we're right back down below a negatively sloping 5 EMA. So this is very critical support right here on IWM at 188, because if we break down below this, we could be going down to 185 and then the gap fill just below 181. The bull breakout at this point will be the break to a higher high after a higher low, which is going to require a breakout back over 192. and then above that we'll have the higher low, higher high breakout, and it will look extremely bullish. On the ARKK ETF, we were down 2.08% today, and you can see ARKK was trying to get a bull breakout early in the morning, but instantly found sellers below that negatively sloping 20 daily moving average and resistance zone at 40.4. We're back down to the 5 EMA, but the last thing we saw was a lower low after a lower high, and now we're seeing what could be the next lower high, which could take us down to the next lower low. The breakdown below 39 was the lower low, and now support is down here right around 38. So if we break down below 39 and 38, we're likely going down for the next lower low at 37 and then just below 35. The bulls need to break back over 41 and hold that breakout look to get back into the low to mid 40s, and that's going to be the bullish breakout. The VIX was up 0.76% today, and the VIX has the third day in a row crushing back down below 20 with a low VIX that does favor a bull trend. Keep in mind, a low VIX in a bear market is usually a good indication that we're getting ready to put in a top, but we have no way to know if this is a bear market or a bull market while we're above the 200 daily moving average. So for that reason, just be cautious if the VIX ever spikes out above 20, and that's going to be a very good indication. If we get the VIX back over 20 in a continuation of this rejection, we could be going back into a bear market. But as long as we're above that 200 daily moving average, you have to have an open mind about the possibility of a bull market. On Bitcoin, we're currently down 0.15%, and Bitcoin is getting that breakdown below the support trend line and the 20 daily moving average, and we're currently sitting right on top of the 50 EMA and the support zone at 22,400. Below that, we could come back down to 21,300 and then the 200 daily moving average right around 20,000. We're not getting bullish until we can break out to a higher high, which is going to require a break back above 24,000 and then 25,000. On Google stock, we were up 1.58% today, and Google did get a close back over the 20 daily moving average and 50 EMA, but found resistance right there at 95.6. We have lots of gaps to fill to the downside at 93.73 and 92.28, so it is possible we need to get a pullback to fill those gaps before we go any higher. The bull breakout will be above 97, and then above 97 we should make a run back up towards 101 to 102. On Amazon stock, we were down 1.21% today, and we are getting rejected below a negatively sloping 20 daily moving average and this resistance zone right around 97 to 98. A breakdown below support at 93.8 could send us back down to fill some gaps at 92 and 90, and that should be a buying opportunity as long as we find buyers at those gap fills. Otherwise, we're revisiting the low down here right around 82. The bull breakout above 98 and 102 should send us to our higher price targets at the gap fills at 109 and 115. On Microsoft stock, we were up 0.62% today, and Microsoft did gap up, so we do have a gap to fill right around 255.62, and we did get rejected from the resistance zone between 257 and 258. If we can break through that resistance, we should have no trouble filling the gap at 262, but a continuation of the rejection here brings us back down to the gap fill at 255 and the strong support zone right around 252. On Nvidia stock, we were down 1.41% today, and intraday Nvidia was trying to break out above that resistance right around 237 to 238, and that does take us to our next price target higher at 244, but we instantly found resistance around that level, and we're back down below the support at 237. This is still a bull trend as long as we're above about 227, so there is the possibility we just kind of bounce around between support and resistance, and we do have support at 227 and 230. If we break back over 238, you're looking for the upside price target at 244, and if we break support at 227, we could come down towards the gap fill at 211. On Tesla stock, we were down 2.01% today, and Friday, Tesla did fill the gap at 198.52, so we can delete that gap, and I did say that was a good probability because the Bollinger Bands were way too squeezed, and we didn't have a lot of more downside potential, so there was a good chance we need to go up before we go any lower. So we did fill the gap to the upside and instantly found resistance, and today we're back down below support at 196, which increases the probability as these Bollinger Bands expand that we're coming down to critical support at 183 and then 173. The bull breakout at this point is going to require a break back over 208, and then above 208 we'll be looking a lot more bullish to retest resistance at 214 and the price target at 230. On Apple stock, we were up 1.85% today, and Apple opened a mile-long gap below, which doesn't close until we get back down to 151, and we found resistance exactly where we would expect to at the resistance at 156. This is bullish if we break resistance at 156, but this is a huge gap below at 151, so be very cautious while we're trading below resistance. If we come down and fill the gap and find support, that is going to be another higher low, but if we break down below the support at 150, we still have another gap to fill down here just below 147. On the financials, we were up 0.08% today, and on the financials, it does look like we're getting a bearish pattern, which means we could see a rejection below 36.3 and come back down to this rising 200 daily moving average before finding support and rallying back into a bull trend. On the industrials, we were down 0.18% today, getting rejected from the previous support trend line, which is now resistance, and a continuation of selling from here could take us down to fill the gap at 100.5. The healthcare sector was down 0.5% today, and we did get that dead cat bounce, and we're right back up towards the resistance between 129 and 130. There's a good chance we could get a rejection from here and continue lower. The energy sector was up 0.05% today with the second day in a row back over the 50 EMA, and we need to break resistance just above at 88.1. A rejection from resistance could take us lower towards the support at 82.6 and then 80.5. So jumping back over to the S&P 500, today was a very critical day of watching price action because while we didn't go anywhere from open to close, we did have a very volatile session and we did see a very critical rejection from resistance. If the sellers can continue this rejection into tomorrow and we can break today's low, we could see more pressure to the downside, which could take us to lower prices. But I do expect to find buyers at the gap fills below, so we're more than likely going to continue into this trading range until we get a clear breakout. So always know both scenarios and let the price action guide you on which trade you're placing. And that is exactly what we're doing to crush the market on the Stocks Channel Discord. If you want to come trade with the Stocks Channel Discord community and get access to all of my intraday updates and analysis, you can find out how to join the Stocks Channel Discord by clicking on the link below. I also have a trade alert service called Bank Trade Alerts that sends you all of your buy and sell alerts directly via email and text message and only trades the ETFs TQQQ and SQQQ. You can learn more about Bank or find out how to subscribe by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.